Hi, I'm Stephen Newton. I'm the CEO and founder of Elixir. It's no secret everyone's seeing a recession in the next 5 quarters. It's going to be a difficult market. But that said, I think our business has performed exactly as we expected it to perform. We are delivering on all fronts. The acquisitions are firing. Our proposition is working across all of the dimensions. I'd say that while it is challenging, and I think a lot of businesses are going to suffer, we're in a position to help them. As always, our consulting business has continued to perform. But really what's driving a lot of our growth is now the opportunity for us to cross-sell between our acquisitions and our consulting business. In financial terms, we couldn't have asked for more. Our revenue is sitting at 33.4 million, which is 39% up on last year. In the first half of this year, we had 4 record months again. It's fantastic that the business has got such momentum in it and it's still sustaining that momentum. So really proud of what the team have done in that regard. Our focus on the US as a key growth market is paying off. We've acquired iLab, a company with a great reputation in and of itself, but it's created a real presence for us on the ground. The 40% of revenue that the US now delivers to the firm is now a substantive part of our business. Our team size has more than doubled in the US. What's even more exciting is we're now going to start improving our awareness out there from a marketing and brand perspective. So we've got a specific investment strategy around getting our brand awareness into that market. We've got the capabilities, we've got the talent, we've got the team size scaling, we've got the clients, and now we're investing in the marketing strategy. So that's all paying off. And candidly, to round out the whole suite on the US, we're still looking for more acquisitions. So there is a real opportunity there and it should scale nicely. Our gross profit this year was 11.4 million and the percentage increase is 23%. Our adjusted EBITDA margin this year is 31%. This is 10.4 million compared to 8.1 million last year. This is a 28% increase. So our profit this year is 8.4 million for the first half against 6.4 million last year. So 31% increase, a great performance by the team. Adjusted earnings per share was 15.1p against 12.5p last year, which is a 21% increase. So net cash is sitting at over 11 million. This is a very strong cash collection. As always in our business, we manage the cash in a business to a very stringent level, and the team have done a great job of that. You will see a decrease over last year, and the reason is because we acquired iLab and we used cash in that strategy, and you can see the resultant performance in the revenue numbers. I think what's been great about coming out of the lockdowns and COVID-19 is that we've gone back to our roots, as it were. We're a disruptor, we're a challenger, and one of the key differentiators that we've always had in the market vis-a-vis our competitors is the fact that we used to run these immersions in person, and they were great for forming relationships. But what's been fantastic is that we've been able to re-energize those in-person immersions in this half, and the value of that is just mind-blowing. From day one, I've been fastidious about building our brand. I've always felt that if we built a strong and reputable brand, we'd eventually start attracting clients to us through reputation and through brand awareness. And it's all starting to pay off. We're now seeing many leads coming from our website, coming from our advertising. This momentum is starting to build. So now not only are we reliant on our partners' networks, but our brand is starting to have a presence in the marketplace, which in itself attracts clients. We're going to put more into this because I truly believe having a strong brand is critical to the success of our company. This is a simple business in terms of growing it. We can get more revenue per partner, we can promote partners, we can hire partners, and we can buy businesses. Touching on the first one, revenue per partner this year has again increased. And I think it's got a lot to do with our partners becoming more skilled. Also, the motivation model, I think, works perfectly, aligns interests of everybody. Partners can delegate and own wider relationships, which means they're responsible for more revenue. So that's driving growth and profitability into our business. So that whole strategy is working exceptionally well. We put a lot of effort into hiring great talent. It's even more important to make sure that we retain this talent. And as investors will know, we've invested in this by creating schemes like the ESPP and option schemes. This really differentiates us in the market, and I think our people are starting to recognize this. So many more of them are investing their own cash in the business because they see the opportunity for economic growth for themselves. People are moving around this market like no tomorrow, but we've seen an increase in retention. So this whole strategy of deploying our equity towards creating value in the long term for all shareholders, and what's the most valuable thing in our business? It's the performance of our people with our clients. And so we've connected our equity to that, and our people enjoy it, our clients enjoy it, and all shareholders are going to get the benefit. If you talk about promoting partners from within the business, This has traditionally been the area in which we get our most success from partners going through the firm. Last year we promoted Sam and Oliver. They became effective 1st of January, both taking on very lead responsibilities in the business. We have made 2 more promotions this year. We've promoted Danny Croucher and Ben Gower. Both of these will be effective from the 1st of January next year. And we've got a great pipeline of talent coming behind this. Some really, really good people sitting in the principal level who could be knocking on the door for partner very shortly. The third key pillar of our growth is, of course, hiring partners in. It brings new capabilities, it brings new networks, and it brings a freshness of ideas too, right? And so one of the things we did is a team hire of Kit Consulting. They're based in Jersey, ESG specialization, led by Emiko Karlui-Smith. What we loved about Kit and Emiko's team was that her position is very purpose-driven. She believes that ESG needs to be integrally woven into the way you do business and your strategy. There's ways to do business that are more sustainable. Emiko is very focused on finding those ways. We don't only do acquisitions, but team hires are on the agenda too. And particularly for strategic hires like this, where we see a key capability and an individual who we think really fits our culture and our strategy. One of our second partner hires is in a strategic market for us, Australia. As is typical for the challenger consultancy that is Elixir, we go where there's growth. And we have been putting down some foundation stones, but we felt we wanted to double down on that opportunity. And so Dennis presented a fantastic opportunity for us, Dennis Orick. He used to be a client, so he's bought our services before. He has a respect for our brand. He's very, very well connected in the banking circles. The third and final partner hire is actually quite an exciting one for me because there's a gentleman by the name of Sam Subasinj. Sam used to be a partner in KPMG. He was a partner there for 15 years or so. I've known Sam for years. In actual fact, I interviewed him when I was a manager at KPMG. So Sam is coming in with a wealth of experience in the UK financial services market and New York. All in, I think the hires we're making now are starting to be a bit more precise to complement where we feel we want to strengthen or we've got an opportunity to grow. The fourth pillar of our growth strategy is acquisitions, and this is empowered largely by our IPO, actually. Firstly, it gives us a whole new set of clients where we can sell our services into those sets of clients. Secondly, it obviously provides us a whole bunch of new capabilities, and it's working across all of the dimensions. So it's ILAP with our digital businesses, Coast and Den. It's ILAP with Return, our procurement consultancy, and vice versa. So the more we continue to strengthen out that portfolio of capabilities, this cross-sell opportunity just multiplies. It's almost exponential in a way. And that is very exciting because it starts creating truly what we decided to set out and do, which was build that platform where we've got entrepreneurial consulting businesses all sharing access to a market and delivering unparalleled client service through the various channels that we have. As investors will recall, our biggest and most significant acquisition is our most recent, which is ILAP. What is great about where ILAP are is that they're on track to exceed the performance targets for their earnings. I'm really pleased about how they've settled in, really pleased with how the cross-sell is going, really pleased with how they're improving their own performance. As the major shareholder and founder, I am very, very pleased with the way the business is performing. Our growth this year has been fantastic in the first half. In the second half, it continues. So we expect to be in the range that we previously called out to investors, which is 70 to 75 million. And our EBITDA, we expect to be above our forecast numbers. We believe we're going to be in excess of 20 million for the year. All the building blocks are in place. The 4-pillar growth strategy is working. The partner team is motivated correctly. The team is motivated correctly. We've got retention. We're getting diverse skills. We're becoming more of a brand. It's all coming together. So I'm very, very enthusiastic about the future. I think that this business can really live up to the bold challenge we gave ourselves to be the best consulting firm in the world. We're not encumbered by the history that other firms have. We're a fresh, new, nimble, equity-based consulting model that the generation of business consulting leaders out there now aspire to participate in. That means that we can really start truly disrupting the big players and actually build the legacy we all aspire to leave.